Good morning, everyone. This is James from Dividend Stock Talk. We are here on, today is Tuesday, April 9th, 2019. Oh my goodness, where is time going? Why isn't this thing going quiet? Right. Okay, here we are. Tuesday, April 9th, it is 9:43 a.m. Yes, I know I'm a little late with this video, but hey, it is what it is. I'm actually showing you videos from the trades in the previous week because this year we're gearing up to create a new home study program, so to teach people how to do this themselves. So today being the Tuesday, April 9th, 2019, remember our goal this year is to, number one, show you how to safely invest your money. Number two, how you can earn also. Oh, let me get out of this one. I didn't want that one open. All right, here we are. All right, now I'm going to show you a couple different ways, a couple different safe, easy strategies to invest your money. If you've been following me for a year, bear with me. If you've been following me for a while, bear with me. I'm going to hopefully teach the new people. We have two main goals. To teach you how to safely invest your own money, because investing your own money is easy, and the powers that be or the professionals make it sound difficult so that you don't do it and that they can get paid for doing it for you, which is kind of silly because you pay them whether you make money or not. But I don't want to start off on a rant on that. Let's just jump in and show you where we are and where we're going. Now, this is what I've already done last week, last month, and the previous few months since the beginning of the year, because we start at ground zero every year. Thankfully, Thinkorswim resets us to zero on our trading accounts, on our practice trading accounts, not our real trading accounts. Our real trading account is what it is. Well, even on those, they start us back at zero every year. So right now, this is our dividend capturing account, where our main goal, our main focus, to gain 1% per month. I know it doesn't sound like a lot, but 1% per month you can do in less than 10-15 minutes per month. All right, 10 to 15 minutes, you invest your money, and you can get 12% per year safely. Okay, so as you can see, we're in April, which is the 4th month, and we have a profit and loss year to date of 4.17. Okay, so it's $4,100 off of a $100,000 account. Now, yes, these are all practice accounts, just to give you an idea of how to do it. Yes, I do have regular, real live accounts. I don't show them to people because I don't want them to see what I have. I'm just here to show you how you can do what it is that I'm doing. Okay, so the goal here on this account is dividend capturing. Stocks, especially dividend stocks. There's only a few of them that we trade, and only because they have a proven track record of consistently paying out dividends for a minimum of 25 years and increasing those dividend payments on a consistent basis. That means if the company continually increases the amount of dividends they pay out to their investors, regardless of what the economy is doing, does it really matter what the stock price is, or are you interested in the cash flow? Cash is great, but if it's sitting in the bank not doing you anything, or in a CD gaining you 1% per year, or even 1.5% or 2% per year, really? Come on. Dividend stocks have been around for hundreds of years. Matter of fact, the very first dividend stock was in 1602, and they paid an average of 18% per year for over 100 years, or close to 100 years, 98 years. But hey, I'm not going to be around investing for 98 years. But let's get back to where we are. Okay, so this account is basically to gain 1% per month. That's it. Other account is for gaining 1% per week. And what I do is I reset it back to zero every week, so you can see what we have done just for the week, so all the numbers don't confuse you. So last week we only did 3 positions. As you can see, there's the 3 right up on top here. AccenturePLC.com, Dollar General Corporation.com, and EOG Resources Inc. Okay, so we made $750 off of one, $1,000 off another, and $3,000 off of another. How do we do it? Simple. As you can see, they're all for April 1st, See? Even the filled orders and the open orders, the trade history. And our profit for that week was, profit year to date, 4,820. Okay, that works for me. But that's only for 1 week. So what I'm going to do today is I'm going to reset back to 0 and start the whole process over again. But before I do that, let me show you the trades from last week so you have an idea of what we did and see if you can do it also. So let's take it the very first one, ACN. Put it in here, ACN. Call it up. All right. What we're looking at might be a little confusing for you, so let me just go back to the regular chart, which is the standard chart right there. Come on. I left my computer on overnight, so when you leave your computer on overnight, and you really shouldn't, it has a tendency to congest, and a lot of crap starts running around. Okay, so Accenture started out the year at 150. Has a nice escalation from 150 all the way up to 175. Then from the peak at 175, she dropped back down to a trading range of 157. Traveled there for about 2 months before dropping like a rock down to 132. Okay, now 132 was the low of the year, and from 132 she went a steady increase to a high of 179, or 178, 179, somewhere in that area. But we jumped in on the 1st. So let's accentuate this. Now here's the 1st right here. Now the reason why we jumped in on the 1st was because we're looking at ACN, correct? Waiting for this thing to pop up. I really should have cleaned out my computer before I started recording, because this is going to be fun. And you know what? As a matter of fact, I think I probably should do that. Okay. Let's get rid of this and put in ACN. Okay, so ACN is actually paying out their dividend tomorrow. So we bought it last week because we were under the assumption that a lot of people are going to jump in to collect the dividend, which is exactly what they did. See, the dividend's coming up, and a lot of people wanted to capture the dividends, so they jumped in and they started collecting it. But this is not the only reason why we bought this. Now, this is just one of our indicators, is when are they paying out their dividend? Okay, great, they're paying it out April 10th. So April 10th is here, and we jumped in on the 1st, which is 9 days beforehand. Why? Well, number one is this called what I call a run-up. When the company's having a dividend or paying out a dividend or having an earnings announcement, which is a quarterly earnings, people like positive stuff when they're investing. So they jump in, and yes, it has a tendency to run up, which is exactly what this thing did. But that's not the only reason why we did this. So what we're going to do is I'm going to show you another one of my little trade secrets. Not really a trade secret. I'm not sure if anyone else uses this, but I was at an investors group a couple of weeks ago, and I found out that nobody in the investors group used this information. So here it is. This is what is called a seasonality chart. Seasonality, which means is basically the seasons, how the stock reacts according to the seasons or the time of year. Now we're into April, which is the red line represents history. Now, if you look in the right-hand upper left-hand corner here, you'll see it says 5Y1D, which means 5 years, 1 day. It means it's 5 years worth of data, 1 day at a time. Now, I don't want to use that. I want to use 10 years worth of data, 1 day at a time. It gives me a more realistic, a more consistency, a better consistency of what the stock does. So as you can see, ACN looks like a company you could buy it in January and sell it, buy it in the beginning of January and sell it at the end of November and make money. Like, close your eyes and boom, there it goes. Because 10 years worth of data says this company starts out low in January and finishes up high in November. Okay, just buy and sell. It's like, set it, forget it. Anyway, That's not what I was showing it to you. This is what I'm going to show to you. Okay, this is this year's, this blue line. The red line represents 10 years worth of data, 1 year on top of another, on top of another, on top of another. Now, they use a bunch of interesting algorithms and mathematical equations in order to get you that because, as you know, 10 years ago, the stock price wasn't at 177 like it is today. Today, it's at 177.86. Great. It wasn't like that 10 years ago. But what was it? A lot of interesting mathematical equations go to give you the numbers that it was back then and where they think it's going to go. So let's just say this is the average over a 10-year period. This is what it normally does because I'm pretty sure Accenture does the same thing day after day. Everybody comes in, they punch their time clock, they go to work, they do their job, and they go home. Day after day, week after week, year after year. Okay, great. So what do they do and how is it related directly to the time of year? Because if you think of the time of year, certain marketers market certain things at a certain time of year. Like when Christmas is coming, it's when all the new products come out. Okay, Apple has a tendency to always introduce a new product in the beginning of the fourth quarter. Okay. Oh, here's a good one for you. Weight Watchers. Weight Watchers has a tendency to spike in the first couple of weeks of the year. Why? Because everybody goes on diet in the first part of the year. All right, let's get back to where we were. Accenture, this is this year's 2019, and I want to left click here, drag it to the right, and that's just give me a very short period of time, which is, I actually want to go back further because we were, okay, we were looking at back in here we were, back in the first of the month. The first of the month when I looked at this thing had a straight line, which basically means it's not going anywhere. It's not going to go up, it's not going to go down, it's basically going to stay the same. Great, I know just the trade to make for that. So I want to jump in here onto the trade. Oh, before I do that, back up for a second. This is very important. Okay. ACN into my charts. Now, this may or may not be familiar to you or not, but this is the chart broken down over the year. Oh, a short period of time. You're gonna have to excuse me for a second. It's there. It's gonna come any second. I'm gonna sneeze. All right. Anyway, back to April 1st. Where are we? Okay, here's April 1st right there. Okay, this is where we are on April 1st. Now, the seasonality chart over here shows that the company is going to go sideways, not going to move up, not going to move down. And I only wanted to hold it for 4 or 5 days. Buy it on Monday or Tuesday, and then get rid of it on Friday. It's a simple trade. Jump in, jump out, and I don't want the stock to move at all. Okay? So, as you can see, this chart right here tells you this is overbought, oversold, overbought, oversold. The middle red line right here, this one, that is 0. Okay, so anytime she goes above the first red line, she's overbought. If she goes way above the 200 line, then she's, yeah, here's the 200 right here. Okay, that's extremely overbought. So where were we in the first? Get back to the first, right there. Right? Right above the other line, the middle line on the ascending, which is, yeah, ascending, going up. So I was pretty sure, pretty confident that the trade I wanted to do was going to make me money if the stock stayed the same, if it went up or it went down. So that's what I wanted to do. I jumped in, and lo and behold, where were we? We ended up getting, where's ACN? ACN's right here. It was at 172, 175. That is the call spread in which I wanted to buy. Now, call spreads basically you're buying one position and you're selling another. So you're at a very small position of profit. Okay? The most money I can make off the trade was $2.50, which is the difference between the 172.50 and the 175. I know it sounds confusing. I'm terribly sorry, but it's really pretty simple if you think about it. And how much am I paying for it? I'm paying $1.92. It sounds like really strange if you think about it. I'm paying $1.92 for this little position. Okay, the most I can make is $2.50. Then I subtract the $1.92 from that, and that gives you an idea of how much money I am going to make for that trade. If the stock stays the same, goes up, or even comes down a little bit. Because where was it on the first? Let's go back to the standard chart. Let's back at the first. That's the 28th. Here's the first here. All right, so here's the first. Here's the first here. So I can get just that. Yeah, there we go. So I jumped in at the open, and it was at what was that, 75.50. So as you can see, I bought the 72 and a half, and I sold the I bought the 172 and a half, and I sold the 175. The stock opened up at 175.51. So I was already in the money. So all the stock had to do was stay where it was or go up. Now, I had everything working in my favor. Number one, it was paying out a dividend, so a lot of people are going to be jumping in on it. Number two, the seasonality chart said it basically moves up and sideways at this time of year. So I got those two factors going for me. And three is the overbought, oversold. So it's on the ascending and the overbought, oversold, which is right here. Let's get back here. And where were we? The first. Come on. Right there. Oh, really? That was quick. All right, right there, the first. Whoops, I want to go this way. All right, that's what I was looking at. Okay? This is what I was looking at the day I bought it, because it comes all the way down here to the first. Right there is the first. Okay, so pay attention to your chart, what it's doing. Okay, it's going sideways, it jumps up. Now look at this. Basically sideways, not going anywhere. Okay, there's no huge spikes in volume, nothing like that. And here, it's way overbought. So it started to the sellers, the buyer started to get out and the seller started to jump in. As she drops down, she finds a steady pace right here where it's going sideways. And as you can see, it goes sideways. So on the first, here I am on the overbought side, and it's still going on the upside, and the dividend's coming, and everything's pointing in this direction. So great. Here I am. I make the trade. The ACN trade, the 172.5, the 175 for 192. Okay. So what I ended up doing is buying 50 contracts because it looked good. And I made $3,000 off that trade. Okay, jump in, make the money and get out. Okay, the next trade we're going to look at is EOG. So let's take a quick look at EOG. Okay, so EOG started out the year at 103. Came up, fought a trading range of, was that 116 to 130, and traveled there for half the year before it found the high of 133, came down, dropped, tried to gain some footage here at 104, 105, couldn't do it, came to a low of 82. That's pretty crappy if you think about it. If you'd bought in at 133 and 2-3 months later it's at 82, wouldn't you start panicking? I know I would. I don't marry a stock. I get in, I make my money, I get out. Okay, I'm doing this for cash flow. I like to get a certain amount in, get out, and then be happy with it. All right, so she finds the low at 82, gets back up to a trading range of, what was that, 92 to 98. It's basically been going sideways for quite a while. Now, back when I got it in April 1st, this is what I was looking at. Okay, as you can see, the high was here at 100. It came down, it hit its 86 down here, came up and hit a trading range right there. If you look closely, it looks like a pennant. High here, coming down, low here, coming up, and it coming together like that. So here we are. We know it's going to go one way or the other, but as we remember, we are now looking at EOG. And there's EOG right there, the 15th, which is next Monday. So EOG might be another good one for this week's trade. I will take a look at that a little bit later on today. And here we go. Okay, so this is what it looks like. And let's go to the seasonality, show you what that looks like, to give you any reason why I got into it. Here's the seasonality. EOG, even if you bought this one in January and got rid of it in November or October, you would make money. I mean, how can you go wrong? 10 years, this is what it does. January, it goes up, and then it goes back down again. If it did 10 years in a row, there's a good chance it's going to do it again. That's what seasonality is for. Okay, here we go. This is the time frame I wanted to look at. Well, that's where we are now. I want to go back to show you exactly what I saw. Okay, here we are at the first. Now, disregard the blue because that wasn't here last week. This was. Go back a little bit further. Okay, this is what I'm looking at. Here we are, April 1st, right here. Okay? Now, as you can plainly see from the crosshairs where it's sitting now, it's on an uptrend. Historically, that means last year, it went up at this time of year. The year before, it went up this time of the year. So on and so forth for 10 years in a row. Does it mean it's going to do it again? No, it doesn't mean that at all. It means that it's done it 10 years in a row just before the dividend came out. So there's a high probability that it's going to do it again. And that's what I look for. There are a lot of stocks. As a matter of fact, I'm going to show you how many. Clear filter. Whoops, come on. Clear filter, and I want to get back to weeklies. Okay, that's how many companies are paying dividends weekly that have weekly options. This money for this coming up for next week. Not next week? Yeah, that's not this week. This week, look at all of them. The beginning of April, not so much. The end of April, not so much. But this week right here, we have quite a bit of them. And I'm not sure. I might do the ones on Friday. These guys right here. I might do that today because they're paying out the dividend on Friday, which means I got to be in and out before the next trading day. The next trading day is Monday, which means all the options expire this Friday, which means these are good ones to get into. But let's get back to EOG, where we were. Okay, so EOG was paying out their dividend on the 15th, which is next Monday. Okay, so you get dividends coming up. The seasonality chart looked good. Well, where was it? April 1st, right here. Because remember, this was last week. This is what the seasonality chart looked like. Looks like it's going to continue to go up, which I probably will get back into again because look, here we are for this week right here. Continue going sideways and up. Now, the chart for EOG, back in January, back April 1st. Where's April 1st? April 1st is right there. Okay, this is what the chart looked like for me last week. Okay, got the low here, 88, the high here of 97, and here we are traveling sideways, coming into a dividend play. And as you can see, she's still above the overbought side, but she hasn't crossed the first 100 line. First 100 line is going to give you a good indication that she's on the downside. As you can see, she's continually going up, coming into the dividend play. So that's why we got that. And what did we actually do? Uh-oh. My mouse is stuck. Lovely. Live TV. Kind of funny if you think about it. Okay, so EOG, what we ended up doing is buying the 94, 94.5. So let's see what EOG looked like April 1st to give you an idea of what we're looking at. April 1st. Oops. Let's go ahead tiny bit. Okay, this is what we're looking at right here. As you can see, you get that pennant again, going from high to where we are, below to where we are. It's a pennant. You know what a pennant is, right? Compression. It's compressing into a smaller and smaller range. So once it gets to a smaller range, it's going to go up or down. We don't know, but we have a good indication because the seasonality tells us, right, from here, from here, April 1st, you're on an uptrend. See the red line? Uptrend. All right, like that. Let's go back to our regular chart again. All right. So here we are, just coming into a dividend. The seasonality chart looks good, and even the overbought, oversold looked good also. So again, it was a good trade. So what were we looking at? She was, okay, let's move forward to where we are today. All right. Okay, it expired on the 5th, 4th. Okay. So we jumped in on the 1st, which is right here. All right. Where's EOG? Okay, we bought the 94, 94 and a half. There we go. Now, it opened up at 96. Now I get the 94, 94 and a half. So I'm protected all the way down to here. Okay, and it just so happened to have closed on the 5th. One more day. Here we go. Look at where she closed on the 5th. Here we are on the 4th. I'm a little bit panicking because I might get stuck with 5,000 of these shares, which I really didn't want. I just want my money. I want to get out and go home. Okay, she opens up on Friday at 94. Okay, and I needed to be at 94 and a half in order to make my money. So she ended up closing around 98. So yeah, I did make what it was only $1,000 off of EOG. Oh, sorry, only $750 off of EOG. Alrighty then. Okay, so that was 2 spread trades. The last trade we made was a covered call with Dollar General. Why do we do a covered call with Dollar General? Well, let's show you. Dollar General. Dollar General started out the year at 96, traded in a trading range of, what was that, 93 to 100, from 93 to 100, for, it was like 4 months. It found the low, it quickly found the low at 87, but it kept on going up, 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 up. With, you know, you have your pullbacks. I don't know if you want to call it pullback, if you want to call it profit taking, but to me, if I bought at 98 and she hits 112, yeah, I want to take my profit and get out of there. A lot of people did. Hit a low of 102. Bunch of people jumped in from 102 to 118. Yeah, I want to take my 18% profit. Get on out. Same thing. So she hit the high on the 4th at 123. So what did it look like going in right around April 1st, which is right there. All right, so this is what it looked like to me. I want to go back one day, so I show 29th. All right, there we go. This is what it looked like on the last trading day of March. And would I get into this? Sure, why not? Why? Because you had seasonality for Dollar General, which is okay. This is what I was looking at on the 28th, 29th, on the morning of the 1st. Okay, because remember, I did all my trades before the stock opened. So here we are. You can plainly see that the stock price is going up. Okay, so I jumped in. Oh, also, let's go over to the chart for DG. Let's go back to the first, what we were looking at, and there we go. Where's the first? Okay, here we are, we're looking at the first. Okay, so this is what I'm looking at Now again, the chart is basically going sideways. It's not really moving. 117 to 120. It's like a $3 move over that 1 month period of time. It's not going anywhere. And look down here. Our overbought, oversold. We are oversold. We are past the 200 mark on the low side, which means there's way too many sellers and not enough buyers. So what's going to happen? Buyers are going to jump in. Stock's going to move up. What did it do? Well, let's take a look. Well, that's the reason why I got it. Why didn't I do a spread on that one? Or why didn't I just buy the call? Because I didn't know what it was going to do. And to be totally honest with you, where are we? DG. When you look at Dollar General, let's look at spread. All right, she's at 122 now, which is this one right here. Huh, that's actually a pretty good one. All right, so the 121, 122 call. This is for today. Would I do this one? I'm not 100% sure. I'm not the mode I'm into right now. I'm trying to explain to you what I did last week. So when I looked at these numbers last week, the price was not favorable for me to get in. Okay, so I wasn't going to make enough money to buy it and make the profit. So, and she had what was this, a 5 or 6 down days? So I was a little leery on that one, but I knew the dividend was coming up. I knew the seasonality looked good, and I knew it was way oversold. So, jump in. I bought, what was it, 10,000 shares, and I sold off 1,000 contracts. So if you buy here at 122, okay, then you can turn around, single, and sell at 110, okay? So you can make your little over 1% profit just on this one stock. And all the stock has to do is stay above 122, and you make your money. Easy breezy. I mean, because the dividend's coming up, so stock's going to move up. The seasonality says the stock moves up this time of year, indicator number 2. Indicator number 3, it's way oversold. Indicator number 4 is that the option was going to expire in, was it 3 or 4 days? And I'm basically selling it for the exact same amount of money I paid for it. And I already collected my, my premium for selling the covered call. So I have everything going in the right favor. I bought a stock, 122. I sold someone the privilege to buy it from me at 122. I made my 1% for the week, which was my main goal in the first place. In worst case scenario, if it doesn't close at 122, guess what I do? I get out of here and I look at the following week. And what does 122 look like for the following week? Another 160. Okay, so I come back on Monday, I do the exact same thing over again. I sell it for exactly what I paid for it. Let me restate that again. I give somebody the option. I sell someone the option, collect the premium for buying it from me for the exact same price I bought it from someone else. Let me give you a second to wrap your head around that one. I'm buying it for $1. Peter's paying me to buy it from $1 from me. Did I make anything off of it? No, I didn't make anything off of the stock. I made something off of the premium, the privilege of Peter buying it from me at the exact same price I paid for it. Now, when Friday comes and that option expires, he has 2 choices. Does he buy it from me or does he not buy it from me? If he buys it from me, great. I made my percentage. I get back in, I do it again next week. If he doesn't buy it from me, fine, dandy. I go next Monday and I sell it to someone else for the exact same price I paid for it in the first place. I think I've said way too much. All right, so just doing that for last week, our profit for last week was 4.8%. But it's a margin account, so it's actually only like 2.4. But that's way above. And if you continue to do 2.4 every week, that's doubling your money at the end of the year. Stop, take a breath. Don't think you're actually going to do that, because sometimes it works, sometimes it don't. Our goal is 1% safely every week on this trading account. So we have 3 or 4 trading accounts we're looking at, but the only two I want to share with you is the Dividend Capturing, okay, which is 1% per month. That's the goal, 1% per month. And Dividend Investing, which is our goal, is 1% per week. Okay, so stick with me, and you'll see what we do this week. Now I'm going to go in and reset all my positions. Let's see if I can remember how to do this. I don't actually remember how to do that. Well, anyway, when I catch that back up with you guys again, I'll start back up at 0, and you'll see what we made for this week, which is the second week of April 2019. All right, you guys have fun. Have a great day, and this is James from Dividend Stock Talk. I will talk to you next week and see how we did. So you guys have fun, enjoy, and I'll talk to you later.